We're going to switch gears here now and talk about cash, cash equivalents, and liquidity. Cash and similar assets are called liquid assets because they can be readily used to settle such obligations. Many companies list their cash and cash equivalents together. Here's an example. This is the balance sheet for Amazon, since we're all pretty familiar with Amazon already. In their assets section of their balance sheet, they list cash and cash equivalents together on one line. For 2019, they had $36,092,000,000 worth of cash and cash equivalents. So what does this include? When a company lists its cash, the cash includes currency, coins, amounts on deposit in bank accounts, checking accounts, and savings accounts. It also includes customer checks, cashier checks, certified checks, and money orders. All the things you normally equate cash to. Cash equivalents include short-term, highly liquid investments that are both readily convertible to a known cash amount and close to maturity and not sensitive to any interest rate changes. Meaning these are very short-term investments that they're ready to cash out very soon. And the amount that's going to be cashed out is known. If a company receives cash by mail, which would most likely be customer checks, they can use internal control procedures such as having more than one person assigned to opening the mail, depositing at the bank in a timely manner, and ensuring that all amounts are recorded. Control procedures for when a company makes payments in cash are to use checks or the company credit card instead of using physical cash. Also, access should be limited. Not every employee needs a company checkbook. It's very important to make sure there are proper controls since most theft involves fake payments. This next slide, we're going to discuss the petty cash system. Petty cash is a small amount of cash on hand used for relatively small payments. This way, a manager can use cash to purchase small items for the business without having access to the entire bank account. For example, at the accounting firm I work at, we have a locked box with petty cash in it. It has small amounts of money and quarters in it. We use it to give to our clients who come in who need money for parking. Also, if one of the employees wants to run across the street and grab something to drink or to eat, our boss provides us with a small amount of cash to do that. I have a few short clips from shows Parks and Recreation and The Office about petty cash.
I need petty cash. My iPhone cover's gross and I need to get a new one.
Yeah, get it to match your personality. Petty cash, Moneyball, go diving.
Gross.
Why do we keep our petty cash in a clear plastic toilet bowl?
I don't know, maybe because we're flush with cash.
I need you to do something for me. Anything. Okay, calm down. I need you to acquire an inflatable house and or castle.
You mean a moon bounce?
What do you think? You've got an hour.
I mean, I need petty cash.
Shunning resumed.
Do you want a drawbridge?
Unshun. Yeah, that sounds good. Reshun.
Oh yeah, this is much better.
Those are obviously jokes, but it shows that petty cash is common in businesses. We're now going to be going over the journal entries regarding petty cash. First, we'd like to establish a petty cash fund. This is moving money from the bank account to a petty cash box in the office. The journal entry would be a debit to petty cash and a credit to cash. Petty cash is an asset. It's a current asset. The petty cash account is going up. To indicate that an asset is going up, it would be a debit. Therefore, money is now put into this petty cash fund. Cash is getting a credit because that account is going down. Basically, just moving money out of the cash account into the petty cash account. You only need to do this journal entry once when you're establishing the fund. However, if you want to increase or decrease the fund, then you would be making an additional journal entry to the petty cash account. To increase the fund, you would do the same entry. You would just move more money from the cash account into the petty cash account. If you want to decrease the fund, you would do the opposite. You would make the petty cash account go down and put that money back into the cash account. You would increase or decrease the petty cash fund based on your usage. If you feel that you're constantly replenishing it and there's not enough money in there, then you might want to increase the fund. If you feel that there's too much cash on hand and you want to reduce how much is in the office, then you would reduce the account. The entry that is more difficult is reimbursing the fund. To give you an idea on how this works, employees will use the fund throughout the time period. No journal entries are made. They will take cash from the petty cash box, use that to buy something, and then put the receipt back in the box. No journal entry is done. However, when the fund is getting low, or maybe it's at the end of the time period, such as every month, we do need to reimburse the fund and record all the payments that were made. To do this, you will debit each of the expenses using the receipts in the box and credit cash. However, if the petty cashier fails to obtain a receipt or accidentally pays too much or too little for something, then the box will be off. The receipts won't match the amount of cash that was spent. If there is a difference, you will either debit or credit an account called cash over and short. If it's short money, you will debit that account. If it's over, you will credit that account. This is what the journal entry would look like. At the top, we have the expenses. You would just list all of them pertaining to the different receipts that are collected. You will credit cash for the amount that the fund needs to be reimbursed for in order to be at the established amount. I do the journal entry for this in 3 steps. First, I list all the expenses from the receipts. Second, I credit cash, the amount in order to make the petty cash account whole again to the established level. For example, if we normally have it at $100 and there's only 20 left, I know I'll need $80 to bring it back to 100. My last step is to add up my debits and credits and see if they match. If they do, you're done. If not, it's because there's an overage or a shortage of cash. I would either debit the cash over and short account if there's a shortage, or I would credit that account if there's an overage. I just try and make sure my debits and credits equal in the end. We're going to be doing an example next. This is practice problem number 1 on your classwork. Please have it out and follow along. Wapaka Company establishes a $350 petty cash fund on September 9th. First thing to do is to put in the date of September 9th. And in this case, we're establishing the fund, so we are starting it. Take a moment to think about what the journal entry would be for this. For establishing the fund, you would debit the petty cash account and you would credit the cash account. The amount would be for how much you're establishing it for, which is $350. So you put $350 in for the debit and the credit. Establishing the fund is pretty easy journal entry. Part B. On September 30th, the fund shows $104 in cash along with receipts for the following expenditures. Transportation in, $40. Postage expenses, $123, and miscellaneous expenses, $80. First, let's put the date in. Our first step is to list all the expenses. We have 3 different expenses here. We have transportation in, the postage expenses, and miscellaneous expenses. We need to put these 3 entries in. Transportation in is the shipping expenses. Since it's coming in, it means we're the buyer. As a throwback to chapter 5, paying for the shipping when we're the buyer, it would be merchandise inventory. So it would not be transportation expenses or shipping or delivery expense, but it would be merchandise inventory of $40. The next one is a little bit easier, postage expenses. We would just list as postage expenses for $123. The third one is miscellaneous expenses. We would just put that in for the $80. That part's pretty easy. Now it gets a little bit confusing. We're going to need to credit cash in the amount to be whole again. We want there to be $350 in the account. That's our established amount. Currently, there is $104 in the account. If there's $104, how much do we need to put into this account in order to be at $350 again? You can just subtract the two to find the amount. $350 minus $104, we get $246. Therefore, I need to take $246 out of the bank account, put it into my cash box along with this 104, and now I'll be at $350. We'll credit cash for this amount, and I did skip a line on purpose. Our third and final step is to see if this balances or if we're off any money. What I do is I add up my debits and then add up the credits to see if they equal or not. When you add $40 plus 123 plus 80, you get 243. That's what my debits are for that transaction. My credits, 246. They do not match. How much are they off by? They are off $3. That's the difference between the two. Where do I need to put this $3 in order to make a match? I would need to put a debit of $3 in. So then my debits is 246 and my credits would be 246, and then they would match. Therefore, I need a $3 debit transaction to cash over in short. Now my debits and credits equal. That's how I do this. There are other ways to do this. I have students who add up all the expenses along with the cash to see how much it's off first at the beginning. It's up to you. Part C, increase the fund to $400 on October 1st. We currently have an established fund at $350. We would like it to be at $400. Therefore, how much do we need to take out of the bank account and put into the petty cash box in order to be at $400? It is not the full $400. We already have $350 in there. It would only be an additional $50. That's one mistake I see a lot is students putting the full $400. That would not be true because then you would be at $750 now. We only want to be at $400. We need to take 50 out of cash and put 50 into the petty cash box. That would be done on October 1st. Petty cash gets a debit of 50 and cash gets a credit of 50. And now my fund is at $400. That is how you do one of these problems.